Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week. Hopefully, lots of great ideas and opportunities for you throughout the show. Well, the stock market fell for most of last week, seemingly acting differently to news than it has in the past. What would normally lift stocks failed to do so. Well, that is until Friday. On Wednesday, the FOMC did nothing. They held policy. And normally on Fed Day, as we call it, the stock market does rally. Well, it had a brief uptick and then quickly reversed and actually sold off quite hard. So that's an unusual way for the market to react to the Federal Reserve. Apple reported its earnings, and they were really good, but forget about that. They're buying back $100 billion worth of stock, and the stock got certainly a lift from that on its day of earnings, but it did really nothing for the overall stock market, which did turn weak after that news. But then Friday, things changed. Warren Buffett, the news came out in the morning that he had added 75 million shares of Apple to his holdings, and that lit a fire under the Apple stock, which of course drove the NASDAQ and drove the stock market higher. And it's higher right now and all day without really any kind of a downtick whatsoever. So Friday is the rescue day for the stock market. Overall earnings, well, they've seen their share of beats, but unless there's some really good news with revenues or analysts or some good forward guidance, stocks have been giving up ground after some good upside earnings ticks. And if you happen to be a stock that or a company that misses on earnings, well, they're taking them out to the woodshed. Tapestry, Cardinal Healthcare, Seagate, Fluor, those are stocks that got absolutely hammered when they reported their earnings. And then we can talk about Tesla. Well, Tesla, basically, that earnings report was just a circus. They did come out with a monstrous loss, like $700 and something million, but that didn't bring much of a reaction to the stock. Everybody's still looking forward to, well, the day when they can actually earn some money, if that ever comes. But what happened was that in the conference call, Musk's arrogance really got in the way, because he cut off analysts based on their questions being, as he said, boring, because they were asking things that he didn't really want to answer. And then he went on and took some other nonsense questions, and analysts and traders got really nervous when they saw that happen, and the stock did sell off pretty hard. He says that they don't really need to raise capital, but their burn rate is up at a record right now, and I tell you what, he may not need to raise capital, but he sure does know how to lower it, because they're going to run out of money. They make great cars. The company is, to me, in my opinion, all smoke and mirrors. That $35,000 Series 3 car, well, it's a total stripped down car. It's really $50,000 or $55,000 if you want to have a car that has, well, Tesla-like equipment. And of course, taxpayers are, funding a good portion of those purchases with the tax credits, which are going to be going away soon. So there's a schedule of reduction on those. So, what if they can finally get up to making twice as many cars as they are now? I'll get up to their projection for later this year of 5,000 cars a week. Can they really sell them? The competition is bearing down on them really hard, and I think this is a company that this year and going forward after that is going to be in some real trouble. Let's take a look as we look at the 60-minute chart of the S&P 500, and you can see the gray area, which is the overnight trading, and the white area, which is the trading during the day. And you can just look over on the right there, and you could see what Friday looks like. Man, there's big liftoff going right here, which is the rescue day for the week. You can see where we started the week right over here, so we're actually still down just a tiny little bit. Not much change really when you see that for the week. Monday, which brought back Merger Monday, lifted stocks overnight, and that merger between MPC, that's Marathon and Andover, and T-Mobile and Sprint, well, it's some buying coming in there. But then you could see there was some news that came out. Israel closed their airspace at the Syrian border over after the weekend bombings when 11 Iranians were killed, and Iran had threatened retaliation. So that got the market nervous at that point, and selling did come in. It was a pretty good sell-off. News came out about factory prices being the strongest in 7 years, and bonds were down about 3/4 of a point. That sold the market off in here, but then we got a rebound as they were anticipating Apple's earnings. Apple's earnings came out. As we said, all that news was good, but not a lot happened in here, and everybody was waiting for the FOMC. ADP came out at 204,000 gain, a little better than expected. Then the FOMC meeting came out, and they did nothing. They said labor market continues to strengthen, and still planning on steadily raising rates. Well, you could see we got a little bit of an uptick right there, and then it got sold off very hard. That is different than the way we normally see things acting. Tesla comes out with that record loss and that nightmarish conference call, and then the news came out that U.S. trade talks, well, China took a very hard line, and that worried investors over here, and we got a big sell-off here on Thursday morning. And then, like, I don't know, did President Trump want to stop it? He comes out and praised Xi, and that said, well, maybe we're not going to have a lot of problems in here, and the market completely reversed. And we had NASDAQ like go from down 100 to up over 100. It was just a giant move that we had in there. And ISM news came out, and that kind of upset the market in the morning, that input costs were rising for manufacturers. We saw Fluor have a nightmarish earnings report. That has to be part of that. Here we are overnight on Friday. We saw China trade talks. They had tiny little agreements, nothing. They're trying to put some news out there that isn't horrible, but mostly they're stalemated. They are actually so far apart. You could drive a fleet of trucks through them, through the problems that they're having on this trade thing. And I don't know, at some point, you know, sooner rather than later, we're going to start hearing the threats from Donald Trump about what kind of tariffs are coming. In the meantime, payrolls missed by a little bit in here. We had the U3 come out at 3.9%. Got investors a little nervous right after that news. Wage growth 2.6%, so that's holding at a pretty strong, a much stronger rate than it was. And look at this stock market here, as it just absolutely has this massive move, not giving any ground at all. And you could see that looks incredibly strong. So that is a look at what happened during the week. You could see that the market basically was, you know, very weak completely until Friday. And then we had this, well, big burst that's going on the upside here today. Stock market overall for the week, we'll call it mixed right now, as we enter into just about 90 minutes left to go in the trading session. S&P 500 is just a little tiny fractionally lower. We'll call it around unchanged. The NASDAQ is up about 1.5%, so that's doing much better. And the Russell is just a tiny little winner on the week. And Russell is weakening relative to the rest of the market, and it was stronger than the rest of the market up until just a few days ago. Bond market, little changed on the 30-year, 10-year to 30-year yield curve, also unchanged at a very narrow 18 basis points. The dollar continued strong, gaining gaining more than 1% on the week. Gold edged lower, of course, when the dollar goes up. The inversely correlated gold market normally goes down. That was down just a few dollars on the week. And oil has a big gain here on Friday, as there are concerns that there are going to be new Iran sanctions, and that an Iran nuclear deal is going to come to an end. So oil ended up about $1.60 on the week, on also a very strong Friday. That news is fighting against massive new highs in production, especially here in the U.S. So once these geopolitical issues are dealt with, and that might take a while, there's a lot of downside risk in the oil market. For the stock market overall, we're still looking at the same type of patterns we have been, even though we have a big up day here on Friday. It doesn't change a lot. I'll show you that when we look in our short-term view. And we think that, these trade talks and the potential for something coming in the way of some sharp tariffs are a risk, and the geopolitical focus is certainly still there. So we have been talking about a decline through late May or into June, and that it could accelerate to the downside. Well, it's not showing that today, is it? But we still think the risks are there, and we're still calling for a lower stock market over the next month. If you're a thinkorswim user, we're going to show you our charts coming up in here, and TD Ameritrade is our preferred broker. And if you would like to get what we call Slim's charts, that's our level 4, and all of our rankings and trade setups, which is our level 3, and all of our videos, which is our level 2, and the new coming stock index report, which we're in beta test on right now, you can have all of that for 1 month on a trial for $64.50. That's half price. And I think that you'll love all of our content. So please do write an email to me, slim@askSlim.com, and then I will send you a special link for that half price trial. Coming up right now is our best and worst stocks for the week. So every single week we do our cycle analysis on about 320 stocks, and we also look at ETFs and futures, so we look at about 400 symbols. And then what I do is review them on Friday and see which were the biggest decliners or advancers, and what are the best patterns, maybe the ones that give us a good indication on some potential trades coming up or investments. And also we're always want to illustrate our cycle analysis. Cycle analysis is a very different way to do analysis on charts, where we're looking at the energetic rhythms in the market. The repeating rhythms that I keep showing you do exist there. If you want to learn more about that, you can take our cycle workshop. All you have to do is go to our site and look at workshops. On the top navigation, and you will see that in there. And just fantastic 20 module workshop. Let's take a look here at the best gainer for the week, which is Pandora P. This stock soaring some 26%. I mean, this is a monstrous move. What's interesting in here, and you could see our cycle analysis as you look at the bottom, those are our cycle brackets, as they're called, and they just show us where the key low timing is supposed to be. You could see that pointing right here and right here and right here. Those distances are very close. You can see right there, and note that base that's formed in there, and that is a key thing that you can see there, as when it forms a base like that after a big decline, odds are that it's going to be able to move to the upside again. In other words, all this directional movement in here is ending, and that's really what happened in here. So it built this base and then went up. The company still loses money. It just lost a little less in here, and the stock gets the pop. Of course, part of that is short covering, and part of that is because it broke above this level right over here, which was what we call a cyclical resistance area. So it breaks out there and it explodes to the upside. Our target is up here between $7.70 and $8 right over there over coming weeks. and earnings losses or not, the pattern is just there, and you can see that why it broke out above that level. 34-week moving average also at the same level where it broke out from. So built the base, got a good rally, earnings didn't lose as much money as expected, and there you go. Take a look at Apple, and you can see in here a just huge up move in here as Apple gained some 13% on the week right now. Big gain in here for the day on that news that Warren Buffett bought a lot more stock. This is a good example of multiple cyclical patterns that you can see on the bottom. So in other words, you can see that this is a big cycle right across here. We call it the dominant cycle, and a minor cycle here, and we call this our cyclical harmonic family. In other words, you have this big cycle right in here and the big cycle right in here, and then the minor one, which is the rally and the sell-off. You can see that. That's this. And then the next rally, which is right over here. Truth be told, even though it held support, I didn't think it was going to make it up to a new high. That's a very powerful move to the upside. Now it gets up to that fib confluence area right there, which is a resistance area. We think it'll probably stop there and then roll over and have a correction. That 23.6% around 177, so that would be our target over the next month, though it could get as low as 172. So, yep, I'm not giving all that much credit to the Warren Buffett holdings or any of that. If you ask me, Apple buying back 100 million more shares is simply saying that they're going to spend their excess cash on their own stock because they have no idea what to do with it. Also, they can't. Their iPhone X sales are slowing. Their inventories are really expanding, and I think that they're doing a great job turning themselves into a utility. And utilities don't command real high PEs. And in this case, I think that it's going to be really hard to make big gains in here. And maybe Warren Buffett just thinks he's buying into utility when he buys the stock. So Apple, I'm not all that favorable on it. It had this burst, which was better than I expected, but still it makes sense when I look at the analysis I just showed you. Here's an interesting look at really incredibly pretty patterns in here. And you can see that the bottom cycle brackets there are, the stock followed those absolutely perfectly, including the minor cycle pattern and including the point where this rally came. So when you get two cycles pointing down, you get the highest probability of a downward acceleration. When they're pointing up, you get the highest probability of an upward acceleration. It came down perfectly into this spot, and here's your upward acceleration. Problem is, it broke this low, and what that means is that you have the potential for a major top forming in here. And if it is a major top, then that area we have listed as a sell zone is important. This is in the investment management area, private equity, and I think it's a big top in there that is forming in APO. MRO, we're going to look at that one because this one gains about 8%. You could see this has our colored phasing in there. So when it's a green phase, it's a rising phase in that cycle. When it's yellow, it's corrective. So rallies in here and then corrects. You can see that, rallies in here, and then gives up all the gain. Now the probability of taking out this high when it's done something like this big rally and giving it all up, is only about 1 in 4 or 1 in 5. But still, it did it there, and that was a low odds probability and shows a lot of strength in the stock. We're looking for it to roll over in here pretty soon and then pull back in here, but overall they beat on earnings, beat on revenues, and a strong looking stock when you look at that. Next one is Twitter, TWTR. This one gained 7%, rebounding after last week's earnings debacle. And this is a big area for it as it gets up into this resistance zone. You can see in here that that's where it stopped before and now is rebounding. And I'm a little concerned on this one that it is going to fail in here and then roll over again. As a matter of fact, you can see that based on this pattern, that is our projection right over here, that it's going to have trouble in here and roll over again and then decline into July. If it manages to get above this level, 33.20, it will be in better shape. Now, that might be a tall order for this stock after the action in here we've seen. And it got a big hit on the Facebook data breach. They've had their own data issues in here now. And that's not a pattern that I'm real friendly to at the moment. The last stock in the best of the week that we're looking at is Cree. Cree gained 6%, and I would call this pattern worrisome, though it didn't really break down. Pulled down here to the bottom of the support zone above that 34-week moving average. You could see it was support right over here, and then pushed to the upside. Now, when I look right over here, this is the daily chart. You could see the cycle analysis on there also. What makes it worrisome is that you can see this pattern right in here. The minor cycle gave you an upward configuration. You can see that. And then you easily went to a new high. This is the slim ribbon for momentum. And that was a good tell that the momentum was still strong. Now, what's happened in here is that you can see this first half cycle is pointed downwards. When you get that, the odds that this rally right in here are going to fail is very high. So we think it's going to roll over, and that's the projection. I think Cree is an out-and-out sell right over here based on this pattern for short-term traders. That would mean now I'm going to go back to the weekly. It has one more pullback in here, and that would be the potential bottom out over here. But you know, this rally that it's having here in the weekly, I think it's going to come down and test those levels again. So I would not be excited in Cree, and I would probably be looking to trade it short based on this pattern I'm seeing in here. That is the best of the week. We're going to come right back, and I'm going to show you the worst. All right, so we're going to look at the worst of the week. There are a number of stocks in here that had some very significant declines. I mentioned earlier in the show that Fluor was one of the stocks that cratered on some really bad miss in earnings. This one was, I mean, almost shocking. We have a stock that is expected to earn some 80 cents for the quarter and then reports a loss. Look at that breakdown. I can't tell you that I had anything that really signaled that you were going to get this kind of a move. We were in rally phase, and that's this right over here. Now, normally when you're in a rally phase and you aren't taking out the high after all that time period, there's a little bit of a warning there that there's something up, but I didn't really see anything in there. And then, of course, it had this massive move in here. The heavy machinery construction equipment area may be suffering from input cost problems. And this is a massive breakdown in here, and analysts are now downgrading it. We have it likely to trade down to $42. That's the 78.6% right there in late May to early June. So if it gets a rebound, I think it is a sell. Fluor down 23% on the week in just a horrible performance. Now, similarly in heavy equipment machinery, this is Caterpillar. Now, Caterpillar did not have much of a change on the week whatsoever. It's up a fraction. So you can see that green, yellow, and all of that very beautiful upward trend in here, and riding up that 34-week moving average beautifully. And here you could see those gorgeous cycles as each of those yellow corrective zones was almost negligible. Here's where you had a big downturn, and look at the size of that yellow zone right over here where it really struggled. So that was, really spot on as far as the analysis goes. Now we're getting a really bad message in here. That green zone that you can see is minute in size. It rallied and then it gave it all up. Now it held that support, and if it breaks that, then see what we're looking at right here? We're looking at a severe decline, and that's after the stock has had this monstrous move for the last few years, and now it really looks like a big top is in place. If it gets underneath this level, 137.5, it's going to be in a lot of trouble. So right now it's already looking really sick to me, and I would say Caterpillar is just plain bad at this moment. Let's take a look at Cardinal, CAH. That's Cardinal Health. I think basically healthcare is about to get sold off. The one I'm short is Humana right now. That one is struggling to get an uptick. You can see in here Cardinal Health down 19% on the week, 18%, something like that. Earnings miss. This was the biggest single declining day in 14 years. So it was just awful. This also is looking at another 4 weeks or 5 weeks or so on the downside. So we think a bounce in here is looking like it's really bad. Take a look at the perfect cyclicality in there, and where each of these cycles were downward trending. You could see this one right in here, and then this one right in here, and then this one right in here, all downward trending. It seemed like it got saved in this cycle right here, and then rallied and failed. Once it broke under this low, that was a negative message, and that foretold this happening right over here. So that's a look at just a horrible looking CAH, Cardinal. The next one we're going to look at is Tapestry, TPR. This is in the category of retail luxury goods, and this you can see is a major decline also. 16% down on the week. Their earnings were in line, but their Stuart Weitzman, Kate Spade brands, they're really showing weakness. Excuse me, and the market is punishing them for that. This is a massive engulfing pattern. Now, this you can see points to a decline out into June. That's where that low is due. The best case I can make is 42 right now. That's a major support zone right in there, but I think it's going to break it. So that support there is at 45, but there's so much time left. I think it's going to head down to 42. You can look at Coors, which trades a lot with Tapestry, and look at that. I mean, another big downside break. This looks like a decline into late May, another 3 or 4 weeks, but it's not as bad. You can see it still does have a little bit of an upward bias to it. Here's your positive cycle here, your positive cycle here. If it gets down to this level right over here at 56, that's going to be very worrisome, because you can see that we'll have a decline and then a rally. But if you get all the way down over here, like, well, maybe likely, then you get a small rally and then decline into the rest of the year. So that is a potentially a big top, and you can see the M top that's forming in there, and M tops are formed by cycle patterns. We have a module about that in our cycle workshop. So that is a look at Tapestry and Coors. First Solar, FSLR, this is a stock that's been great, and now look at that evening star pattern there that has formed, and that right over here looks like a top forming. That should be a decline out until mid to late June. 34-week moving average support, but again, this does not look very good to me. There were no news in here. It just hit that resistance area on those fib extensions and then took a dive. So that's a look at the First Solar and what looks like maybe a topping in the solar category, which has had, well, a bit of a run. One of the stocks, I have not liked the healthcare or liked the biotechs. One of the stocks in the biotechs that to me was looking like it was bottoming was Gilead. Earnings came out on them, completely proved me wrong, and Gilead now has joined some of these other stocks in the biotech category, GILD, in now what has a very awful look to it. I had thought that the bottom had come when we got this flattening out right over here, that turned out to be only a little consolidation pattern, and then earnings beat it up. Their earnings missed, and now they've extended this out a little bit on the length of time. This cycle is likely to bottom right in here and then get an upside turn. However, if it gets up here above the 74 area, I just think it's going to be a screaming sale. And we'll just take a look at the daily chart in this one. You can see in here that big downside gap. Their momentum has turned negative. In fact, the momentum was negative right over here. You can see that arrow pointing right there. And once that turned negative, it just absolutely got it in a lot of trouble. You can see where it turned positive right here and gave you that big upward explosion, turns negative over here, and gives you this big downside move. What's interesting is that there's about 2 or 3 or 4 days left in here in this pattern. Let me just take a closer look for you to see, and then it's likely to get a bounce. So that's the daily. This is the weekly, which looks like it's about to bottom. And this is a case where I think you're going to get a bounce. However, do you dare trade it long based on what you're seeing in here? I mean, I don't know. I doubt it. I don't think it pays. CVS, the next one we're going to look at in here, the news, earnings beat, revenues poor, and they are moving ahead with the Aetna acquisition. You could see the very nice cyclicality when you look at it in here. There's a little shifted cycle there. They bottomed right there. You can see clarity in that bottom. If you look at the declining areas, you can see right in here, that gave you this correction. These rallies gave you this rally. Nice nesting right in here and a big break. Nice nesting right in here and a big break. Then the rally came where it was supposed to, but look at that engulfing pattern. It couldn't even get up to the resistance zone and then rolls over that way. This is in a lot of trouble, and I'll call CVS bad when you look at that. Let's take a look at Cummins. Cummins is in that, as they build engines, and I love this chart. I mean, just fantastic cyclical patterns when you see in here. They had a big earnings miss in here, and look at these gorgeous patterns. And does this ever tell a story in here? You can see in here 34-week moving average. It's dancing up to 34, in fact, even up to 13-week moving average right there. Each of these cycles in here, the bottom are the ideal and the top are the actual, were perfect, spot on, just beautiful. And then when this rallied and took out this low right over here, it signaled that the major top was coming. See that note right there? We've had it there for weeks, and we believed that this next rally was going to fail, and sure enough, there it did. So what does it point to now? This is July. This is July and $123. It's now trading at $145 after declining big on this week. And we think that there could be some fantastic short sales setting up in here. You get rebounds in Cummins. I think it's headed back down. And we'll call this target right over here 124 in July. And I just think you short the upticks. I think it's a high probability. Seagate is the last one we're going to look at, STX. And you can see in here that it really ran into trouble up at those fib extensions up there. Earnings beat, revenues beat. It wasn't enough, basically, when you saw the stock sell off and then rebounded because they said, well, whoa, those earnings were really good. And now you can see right in here as I look at this kind of looks like a flag forming, and you could see momentum went negative, and it's making this flag right here, and that says to me you're likely to get another move to the downside. I'm going to go back to the weekly, and you can see that we have a decline likely into May. That low around 49, well, we kind of think it's going to test that one again. So watch that little flag that it's making on the daily. It's very possible that it will be breaking down. That is the worst for the week. We last week told you about our new service, which is just absolutely amazing. Again, I want you to look at it. We're only in the last couple of weeks of beta testing right now, and if you become a level 1 member, you can see this and use this for free and get a sense for what it is. I'm going to tell you a little bit about it right now. It's our goal to always be improving our service. And our stock market charts, well, they're pretty complex. And some people, they don't want to subscribe to our top level service, getting our charts on their platform. So we've created a new product, essentially a service that describes our stock market analysis for everybody. Short-term traders, swing traders, investors. This is just an amazing service, and I'm going to show you very quickly what's in here. This is the askSlim Stock Index Report, and it's beta. The reason it's beta is because we're testing it out. What we want to do is see, do you like it, and get your feedback. The Stock Index Report has got several pages to it. We start out with the cycle conditions, and you can see that we talk about monthly condition, and we give you the whether or not it's bullish or bearish or neutral. We do the same thing for weekly and the same thing for daily, and even give the dates that we expect if there's a decline for the correction to come down to an end. So it's pretty good information. The next thing we'll show you is our momentum conditions, as again we're looking at monthly, at weekly, at daily, and even at 2 hours to give you a sense for the momentum conditions of the market. Really very, very valuable information. This is our daily momentum chart, and you can see it's 3-month daily, looking at the S&P 500 and the NASDAQ and the Russell. And we update this on Sundays, so that you will, on Sundays is when the update comes, and our regular full update comes on Thursday morning. So you get a picture of this a couple times a week. Here is the 2-hour index and our proprietary market condition indicator. Once you learn to use these things, just amazing for your shorter term trading. And this is our weekly cycle analysis, and we do this on the S&P 500, the NASDAQ, and the Russell. We show you our projections and our cycle analysis, and we do the same thing on the daily chart, and we do an overview where we look at all the time frames and explain them to you. Essentially, you'll be able to get this brief explanation every single week, and then have this great feel for the market. It's a ton of information that you're going to get in the Stock Index Report. All you have to do is become a level 1 member. It is free right now because we are in beta test, and for level 1 members, get the archive to our Market Week show. You'll be able to go back and look at things that we've said and learn our analysis. You'll be able to get our special videos. We keep adding videos in there for free for our level 1 people, and the Stock Index Report. This is no cost as we are in beta and we're testing it. This huge amount of information, well, we'll give you this full update on Thursday and interim updates as needed. Usually on the weekend we'll do one also. And we're doing this for free because we want your feedback. We really want to get a sense for how much you really like this product. And the promise is that I'm making right now is that if we adopt it, it's going to be an extraordinarily low monthly fee. So you can help us right now by subscribing, becoming a level 1 member, and then getting all of that. For the next few weeks, we're going to continue to do this and look for your input and give you all this great information. If you need any help with the subscription and signing up for level 1, just write me at slim@askSlim.com, and I'll help you with that. That's it. This is, I think, an exciting new service that we're bringing you, and we look forward to you signing up and testing it out. Thanks a lot for listening. All right, short-term view for the coming week. Don't forget, follow me on Twitter at askSlim. We put out tweets every day looking at some of the bigger movers and put those charts out there. So follow me there. And as far as YouTube, we put out a lot of videos too, including this video. So subscribe to us on YouTube and make sure you give me a thumbs up because that helps us with our standing with YouTube. And don't forget that we'll just have a couple more weeks in the Stock Index Report beta testing, so it's important for you to get a look at it. And so sign up for level 1, and remember that level 4 special that we're running also, that you can get my charts right on your platform. That's, of course, Thinkorswim. All right, so let's get into this short-term view for the coming week, take an accounting of what I said last week. Good week. I mean, I would put me at about 70 or 75%. What that means is that the short-term movements in the 5 markets we're going to look at followed actually very closely. I didn't really expect the big Friday upside move in the stock market, and so that's why I'm only going to get half credit for the stock market, which fell most of the week. And also the dollar I missed because I thought the dollar would pull back this week and it was strong. We got light crude, gold, the bond market completely right. So really overall pretty good. Take a look here as we look at light crude for the coming week. We had said last week that we thought it would decline and then bounce. We thought it would get down to 66.70 and then come back up. And that was spot on. Momentum was strong then. It's still strong now. You can see the slim ribbon held it as well as that minor support and then moved to the upside. For the coming week, we're looking for it to roll over after maybe testing that 100% fib. Now, that's at around 70 bucks. We were kind of looking at that target up there. It could get up to about 70.75 and then roll over, and we would look for if there's no Iran-Israel bombing, then it should really not be able to make a lot of ground after that. So we're going to look for it to get up here, roll over, and then follow this pattern a couple of weeks from now, get up here, and then have a sharper decline over there. So that's the short-term and a little longer short-term view for light crude. Take a look at the dollar DXY, or $DXY. And we expected the dollar would decline for the week. What we were looking at was the minor pattern right in here, which we thought was rolling over. Now, you know, we looked at this nearly gravestone doji at that point and said, well, that's significant. But then it failed. It didn't follow through and didn't roll over as we expected. So instead of taking this pattern that we looked for right here, it extended up and is doing this over here. That's overall a very strong pattern. What it suggests is that we're probably going to see some choppiness this week. In other words, the bottom come in here and then a rally and then maybe roll over again. That's the notes I have to myself on my sheet. They look exactly like this right in here, and that's what I'm expecting the next couple of weeks, to get into a choppier period for the dollar. Out over here, the risks increase to the downside, but that might be the end of next week or the beginning of the following week. But before that really happens. So that is a look at the dollar, and we'd say that mostly we think the upside progress is over with for now in the dollar. Next thing we're going to look at, well, let's just take a quick look at the euro, because what we thought was the euro, which we got wrong, was going to have some small bounce, and that the bounces would fail. And you could see that strong momentum there in the dollar. Well, just the opposite of that is the euro currency. And you could see the negative momentum here in the slim ribbon in the euro currency. We thought small bounces would fail. The problem is there was not a single small bounce in there. So we don't really get any credit for that either. Momentum's still negative in there. And you can see we're looking for a bottom in here coming in just 2 or 3 or 4 days. So that kind of follows the inverse of the dollar pattern we're looking at. Now we're going to switch over and look at the gold market, which tends to trade with the euro or opposite the dollar. Same thing we're looking for. We think the euro is going to bottom in 3-4 days and the dollar peak. Well, you can see in here that we can see that it looks like the gold market looks like it will pull off maybe one time. We'll look for some choppiness in here and maybe a little lower low. Last week we said it would get down to 1302. It got down exactly to 1302. Then it has this little bounce and this morning star. You can see that right there. Well, what is the morning star? The morning star basically says that that is really an important level right over there. So that's actually red, and I don't want that to be red. So we're going to edit that and make it green, because I can't stand when it's the wrong color. So I'm just going in here and I'm going to edit that, and we're going to make that green so you can see it's much prettier there. That's declaring that 1302 as an important level. So if we get another pullback to there, that that might be the bottom, or again, 1288 is another important level that we're looking at down there. So those are the levels. We think that's over the next week, and then very likely as we see the dollar topping, we're going to see gold bottoming in our opinion. So choppy week, and probably to the downside, small in there. And see the momentum right in here, negative. Well, that's what we're looking at, and it tells us that when you have momentum that's negative, as you see right here, and the projection oscillator overbought, as you see right here, the odds are very strong that you're going to get a downside move again. So that's why we don't think it's quite bottomed and likely to come down into this area again. That's a look at gold. We'll call it small down for the week and turning up in a couple of weeks. Next thing is the bond market. We're going to look at the ZBs. And what we had expected for the week was that we were going to get a rally. We were going to test up in the area of 143.20 to 144.08. And I'll get a little closer look in here, and you can see in here that gets up to 144.06. So that was really good, and that's a resistance area. We expect that sometime here we're going to be getting a pretty good rolling over and moving to the downside again. We'll call this week a little choppier up here, but then the risks mounting, and this area right over here at around 141.16 is very likely to be taken out. And then you can see our projection way out over here that we're likely to have more downside then. And we don't see the low coming for about a month in here in the bond market. So we continue to expect that these resistance sell zones are going to be good spots to be doing exactly that. So that is a look at the bond market. Stock market. Okay, so stock market is roaring here. S&P's up 37 points on the future, 40 points on the cash as we get into just the last hour of the day right now. And this is just a huge uptick. That we have some numbers that we're looking at that, you know, basically only change the short term look at the market, and it doesn't do anything to the intermediate pattern, which says that, well, it's fairly likely that we have problems into May, June. And this rally is just all completely within the range that we were looking at, but there is something interesting going on right now, and that is the pattern that we were looking at called for further decline out over here, and you can see this period of risk right there. Now, if you look at this this cycle bracket right over here, that's kind of a light purple one right there. We were looking at that one and this low that it made almost perfectly spot on. But we left this gray one in right over here because that one had a lot of dominance in the past, and you could see that it came down exactly at that timing and then turned up. And now the fact that we're getting up here back into this resistance zone and threatening that high at 2683 gives a lot of credence to that bottom. What that does is it shifts things out a little bit, but doesn't change them very much, because if I highlight this bracket right over here, you could see that ends on June 10th. So what that would do would be to, and you can see this gray area period of risk we have written there, that would then follow this pattern up over here. It would then roll over and then decline over there. So that's looking like the dominant pattern that we're looking at right now. It's a little different than we expected or shifted out in the last, just on Friday actually, but it doesn't really change anything on the big picture. You'll note that VTL right there, that's that dashed line, valid trend line, that's about to break out, and the NASDAQ did so today. So the NASDAQ is much better, and the Russell is losing a little bit of strength. Again, we give you a real good description of this on the stock index report, on how all of these different time frames play together. So what we're going to look for in the next week is that it's likely, based on the fact that it got way up here, to follow this pattern. In other words, get up here, get up to this area around 2700 to 2710, and then roll over there. That 2682 number or so really confirms it right over here, and I think it's a pretty strong likelihood that it's going to do that. So again, our target's going to be 2700 to 2709, and then rolling over after that. And that doesn't change anything on the longer term pattern. You just have a really good update today. And I'll just be revising these a little bit for our members when they get this chart. And then it will show up on the next time we update on this Thursday on the stock index report. And all the momentum figures will probably update a little sooner than that. So that's a look at the short-term view. We're going to look for the stock market to rally a little bit more, get up to 2,700, 2,709 in that area, and then roll over from that level. It's not very far, but it is 30 or 40 more points potential on the upside in the S&P 500. That is it for the show. We covered a lot of great stuff today. I hope you loved it, and let me know. And don't forget, we've got all these great offerings out there, and if you have questions about them, please do write to me at slim@askSlim.com. I want you to be careful because it is so crazy out there. We're always wishing you great trading.
Well,